meeting for May 25th, 2022. And the first order of business is approval of the agenda. Do we have any corrections or changes to the agenda? No? Okay. We don't need to go to roll. And the next step is approval of the May 11, 2022 Management Committee minutes. Any corrections, changes, or updates to the minutes? No? Thank you. So we need to do a roll call, right? Motion, thank you. Motion to approve the minutes.
So moved.
Second?
Second, Rafi.
All those in favor?
Aye.
Opposed? Motion carries. Thank you. So just moving quickly to the business for today, and we have 4 non-consent business items. And the first one is item number 2022-73, Risk Management Liability Legal Services Master Contract with Mr. Walljasper, who's the Director of Risk Management and Claims.
Good afternoon, Mr. Chair, committee members. This business item 2022-73 is seeking council authorization to negotiate and execute legal contracts with 3 different firms. These would be services related to our liability claims, and the aggregate amount would not exceed $1,350,000. So the types of claims that this defense would provide coverage for, as I think we've talked about before in the management committee, we self-insure our liability claims here, and we also self-administer those out of the risk department. Types of claims would be injuries to passengers on our bus, injuries to passengers on our light rail, property damage to third parties that arise out of our operations. Those represent claims that could result in the need for defense counsel, so we have these 3 firms that would be able to provide that service for us. So working with OGC, we went through the RFP process and identified these 3 firms as those that were best value for us, providing the expertise that we needed with the specialized service. We have a lot of no-fault claims with our bus operations, which is somewhat unique and specialized. And again, Mr. Chair and committee members, this business item is seeking authorization to renew with those 3 firms at an amount not to exceed $1,350,000. And I'd be happy to answer any questions you might have.
Any questions? I just have a quick question. So do you have an estimate of the number of claims that we have paid under this rail insurance in the last 6 months?
Mr. Chair, the rail insurance or for the legal services?
The legal services.
So the legal services contract, I don't know for the last 6 months. I can tell you we have referred 2 claims so far this year,
Okay.
which is very low. Historically, it's anywhere from 40 to 50 claims. And we spend about $300,000 to $400,000 a year total on the liability expense for legal services. We've seen a decline in our claims, obviously, with the decline in the service, so that's built into this $1.35 million.
Okay, thank you. That's what I meant.
Yeah.
How many cases we have. Any other questions? No? Okay. So I'll entertain a motion to approve item 2022-73, the risk management legal services master contract.
So moved.
Do we have a second?
Second.
All those in favor?
Aye.
Opposed? Okay, the motion carries. Thank you very much. All right.
Mr. Chair, the second business item as well. So moving on to that, 2022-137. It's seeking council authorization to renew our railroad liability insurance with the Northstar commuter rail in an amount not to exceed $2,480,000. This is the same week item, June 1st of this year to June 1st of next year is the policy term. That's why it's the same week. It's something that's required according to our Burlington Northern agreements. Let's see if I have a chart here. Did we have a chart to put up for this? Okay,
Sorry,
maybe I'll wait for that to pop up, but,
it'll be right on.
okay, thank you. So these agreements require the insurance in the amount of $323 million per occurrence. And whenever you have insurance at that level, you utilize several different insurance companies, each providing a layer of insurance. And that first layer is called the lead layer, which is what we really focus on. That lead layer sets the stage for the pricing and for the coverage throughout the rest of the tower of insurance. So what we do when we have this requirement for $323 million is we market the program to several different insurance companies, trying to determine, number one, who wants to be on the program, number two, and most importantly, is who wants to provide that lead layer of insurance. Through that presentation, through the marketing effort, we determined that AXA XL, once again, was the most advantageous at that lead layer. So we negotiated with them, locked into a price, and then set the rest of the layers above that. And if we don't have that graphic to put up.
I'm sorry, I do not have that.
Okay, that's right, we still talk about that. So we have that lead layer established, and then we build out the tower above that. And again, that lead layer was with AXA XL. The overall increase of the insurance was about a 2.6% increase compared to last year. And that was primarily driven because of an increased expected ridership that we have for Northstar. So with that, Mr. Chair and committee members, I would be happy to answer any questions. But again, the proposed action is seeking authorization to renew Northstar commuter rail in a amount not to exceed $2,480,000.
Question, Councilmember Barber?
Yeah, I have just a quick question. So, you said the percentage went up is because they expect more riders this year. So were our rates lower last year because we weren't expecting more riders? Just curious.
We did have, Mr. Chair, committee members, we did have lower ridership last year with lower rates that resulted in a lower premium. The rate is roughly, it's just a slight increase in the rate, but with the overall increase in the ridership, that drives, the premium is driven by the rate times the number of passengers. So that's what increased that.
Just curious.
Yeah.
Any other questions? Just a quick question, because I kind of remember the last time we had this conversation about the rates for the insurance. Is the 2%, 2.5, I think you said?
2.1. 2.6, I'm sorry, 2.6.
Is that in line with the pre-COVID increases of insurance premiums?
Mr. Chair,
I mean, are we normal times again? That's yes.
Yeah, Mr. Chair, I would say that no, it's a much more difficult insurance market now. And a lot of it had to do, it started before COVID,
Okay.
but it was really driven by the fact that we were seeing several years of insurance declines, insurance rate declines. And the insurance companies had some big losses, not only with rail liability, but they are seeing big losses with other lines of business.
Okay.
So what they will do is try to recoup those losses through, across the board, they're going to have increases in all lines of business. What we've seen is that a lot of insurance companies in this market and the rail liability are simply exited the market and have chosen not to write insurance in this, or they reduce the capacity that they can put up. So in other words, they could put up 25 million in the previous year, but now they can only put up 5 million. And to put this in a little more context, we had about those different layers I talked about. We had 19 of those 4 years ago. We have 42 right now. We have 42 layers of insurance on this because of the fact that people can only put up 2.5 million there, 3 million there, and we just try to piece this together to come up with a full $323 million in limits.
Okay. Thank you. Any other questions? Can I have a motion to approve the item?
Move.
Do we have a second?
Second.
All those in favor?
Aye.
Opposed? All right, motion carries. Thank you very much. The next item on the non-consent business item to address is item 2022136, Municipal Advisory Services Contract. And we have Mr. Thompson.
Thank you. Thank you, Mr. Chair. Mark Thompson's Director of Treasury. And business item 2022-136 is requesting the council authorize the regional administrator to negotiate and execute a contract with Baker Tilly Municipal Advisors for municipal advisory services for an amount not to exceed $1 million. And just a little background, a municipal advisor helps us when we issue bonds. As you know, we issue bonds approximately annually to help fund our capital projects. And each time we issue a bond, we engage a municipal advisor to help us structure the bonds, provide us expertise on pricing, help us with the rating agencies, market the bonds to potential investors. They help us close the bonds, facilitate the closing process. They facilitate a lot of the legal documents. So they're really a vital external partner and one piece of the puzzle when we issue our bonds. The current contract for these services expires at the end of June 2022. We went through the RFP process and we had a pre-proposal meeting which had 8 registered plan holders. We ended up receiving 3 strong proposals by the deadline in April. The Office of Equity and Equal Opportunity reviewed the procurement and no goal was set because no MCOs were identified that could provide the services. It's a very specialized service. And the proposals received were evaluated by a team, an evaluation panel made up of Treasury, 2 people from the Treasury Department, 1 from finance staff in environmental services, and 1 from finance staff in transit. And the proposals were evaluated on quality, qualifications, experience, and cost. And after the individual evaluations were made, a consensus meeting was held and Baker Tilly was selected as the most advantageous proposal for the council, given their experience and their depth of services and their pricing. So this proposed action, supports the Thrive outcome of stewardship, as competitively bidding the service provides us with the municipal advisory services at the best value and ensures that we're going to get the best pricing on our municipal bond sales. So, Mr. Chair, the proposed action is that the council authorize the regional administrator to negotiate and execute contract 22P030 with Baker Tilly Municipal Advisors to provide municipal advisory services for an amount not to exceed $1 million. And I should mention this is for a not to exceed 5-year term. So with that, I'll answer any questions.
Any questions? Just a quick question. Have we used this company before? Is that?
Yes, we've had them under contract
Okay, thank you. That's what I thought.
for a long time, so this is our one we had previous.
Well, if there's no questions, can I get a motion to approve the item?
So moved.
Second?
Second.
All those in favor?
Aye.
Aye.
Opposed? Okay, motion carries. Thank you, Mr. Thompson.
Thank you.
Okay, and the next item, non-consent business item that we have on the agenda is item 2022147, which is a labor agreement with the International Union of Pipefitters, local number 455, with Ms. Cordes. Thank you.
Yes, good afternoon, Marcy Cordes, Chief Labor Relations Officer. We do have a settlement with our Pipefitters Union, which actually represents one pipefitter who performs his work for environmental services. The party reached a 3-year tentative agreement on May 12th, which was ratified on May 18th of this year. As you know, the council negotiates the trades contracts in accordance with the rate that is paid, the total package rate that is negotiated between the trades locals and the construction industry. And this is a package rate that includes wages, as well as 2 pensions, time off, and health and dental insurance. The increases over the 3-year period effective May 1 of 2022 are 4.6%, 4.2%, and 3.9%. The starting package that we're using for 2021 is $80.26. Under the Thrive lens of stewardship, the settlement falls within the parameters established by the Council for Managing Labor Costs, And the lens of prosperity, the agreement, we believe, represents a fair and reasonable wage settlement that demonstrates our commitment to investment in our employees. The agreement was negotiated within the parameters established by this committee, and our proposed action today is authorization for the regional administrator to enter into an agreement with Pipefitters Local 455 effective May 1, 2022 through April 30, 2025. And I'm sorry, I forgot my glasses. So. Any
Okay.
questions?
Any questions?
So you said the bargaining unit is one individual?
One individual. Mr. Chair, Councilmember Musa, I know that there is more work, and they have been transitioning a little bit to using contracted workforce as well because of the nature of the work and when they need it.
Okay. Any other questions? No? Okay. Can I get a motion to approve item 2022147?
Moved.
Second. Okay. All those in favor?
Aye.
Opposed? All right, motion carries. Thank you.
Thank you.
Okay, so that concludes the business part of the meeting for today. So we have a few information items for our review, starting with the quarterly investment review advisory committee report, again with Mr. Thompson. So welcome again.
Yes, I'm back. Thank you, Mr.
Yeah.
Chair. Yes, this is a quarterly presentation to this committee. This information was presented to the Investment Review Advisory Committee in early May. And now we're also presenting it to this committee. It's a review of our investment portfolios, status as performance and holdings and status as of the end of the first quarter. So I've got a presentation. We'll quickly talk, there's a couple slides here about the economy and interest rates, and then we'll talk about the 3 different portfolios we have and what their performance was like the first quarter. So if I could go to the first slide, you've already got it up, thank you. So it's no surprise what the economic themes are in the first quarter. As anybody knows here who's been spending their money, inflation has been red hot. So that was the biggest issue in the economy in the first quarter. The Federal Reserve is committed to fighting inflation. So what we're seeing is spiking interest rates. So the Fed is looking to use their tools to fight inflation. They're increasing interest rates, as I'm sure you know. They started increasing interest rates in March. For this report, but they've also continued to do so in early May. They raised rates again, and they're predicted to do it again in May and June. And we'll talk a little bit more about that, in June and July. So interest rates spiked dramatically in the first quarter, and I'll talk about that in a minute with another slide and then show you how it affected our performance. If you can go to that inflation, just a quick background. Like I said, everybody knows we're in a period of super high inflation. The Cpi Index, which measures consumer prices, spiked in the first quarter to the highest level since 1981. The CPI started to go up in March of 21, so it's been rising for a while. But it hit record levels in the first quarter. December it was 7.12%, January it was 7.5%, February it was 7.9%, March it was 8.5%, and I'm sure you've heard about this on the news, and then It's continued into April, it was 8.3. So the 8.5 level you see in this chart was the highest since 1981, as I said. The Fed's goal is 2%, so this is very high levels. The red line on this chart shows the core CPI, which excludes the volatile sectors of food and energy, and even that at 6.5% was the highest since 1982. So very high inflation. It's caused by a number of factors. The supply chain, continued supply chain restrictions, global lockdowns, labor shortages, Russia's invasion of Ukraine. There's been some energy supply concerns from that. Demand on the demand side, it's not quite yet, Lori. But anyway, I'll just continue. That's the next slide. But on the demand side, consumer demand continues to be really high, and we've seen a spike in demand for all sorts of things as we come out of the pandemic. We've got stockpiled consumer savings, rising wages, low unemployment, pent-up consumer demand. All those things have really caused an imbalance. So the Fed is stepping up to fight it. Now we go to the next slide. I know this chart is a little confusing to look at maybe to some, but this chart is showing the expectations for future interest rates and the rate hikes from the Fed. So you can see the meetings listed down the left, the meeting dates, the upcoming meeting dates of the Fed. The Fed is setting short-term interest rates, and this kind of shows what the market is expecting them to do. We started this quarter, and the market was really, so this is back to January 1st, market was really pricing in 3 to 4 hikes during 2022, each of 25 basis points. But over the course of the first quarter, because inflation was spiking so much that the expectations have really changed. Now they're looking at hiking rates at each and every meeting, is what the market is thinking. So you can see the meeting dates there, and they're looking at raising it 50 basis points, like I said, instead of 25. So the expectations for rate hikes have really dramatically increased during the quarter. So if you look in the applied rate column, you can see where they think the Fed funds rate, which is their target overnight lending rate, will end up at year end just under 3%, starting at 0 to begin the year. So it's pretty dramatic. The last time the Fed increased rates was in 2016, 2018, and they went from 0 to 2.25 at that time in about 3 years. So here we're talking about going faster in a shorter period of time. So it's a dramatic increase in rates. So next slide. This is a Treasury curve. I hope you can see it. This kind of shows how interest rates have changed. The green line was about a year ago, end of March. The middle blue line shows where interest rates were at the beginning of the quarter. And the dark blue line on top shows where interest rates were at the end of the quarter. So you can see dramatic change between the two blue lines. That all happened in a very short period of time. And we'll talk about how the reason I show this is to give you an idea of how rates have changed, how quickly, and we're going to talk about the effect of that on the portfolios. Yep. So now this is the S&P 500 over the past year. I'm sure everybody's heard about this on the news, but the fears of recession, the fears of high interest rates have really hit the stock market as well. And you can see in January we were at record highs, first few days of January. Excuse me. And then you see the dramatic decrease in January and February into mid-March. And then there was a spike in late March where the market came back up. Now I'll add to this is as of the end of March. Also, it's continued to go back down again in April and May. So unfortunately, that affects our OPEP trust portfolio, which we'll talk about in a moment. So the S&P 500 finished down 5.3%. for the quarter, the first quarter. So with that scenario of interest rates, I'll talk about the three different portfolios. You can jump to the next slide. And we'll talk about three different portfolios. Next, please, we'll just jump to that. This slide shows our three different portfolios and their balances. Now these are year over year numbers, so it's first quarter, comparing first quarter of 2020, 21, and 22. And you can kind of see the balances. I won't spend a lot of time on this, but let's jump to the next slide. We'll start out talking about the short-term portfolio. This is where we manage our cash around our expenditures, so it's a cash flow portfolio. If you look at the left side of the slide, it's showing how the portfolio is allocated on the bar chart. It's $858 million as the end of the quarter, invested 84% in T-bills, 12% in discount notes, and 4% in money market funds. I guess I'll just quickly point out, you can see the purple part of the bar chart is expanding the last few quarters, which is T-bills. So we've allocated more and more to T-bills over the last year or so. And it's strictly because of yield. So this is a very short-term portfolio. We have a lot of maturities, a lot of turnover. So we're constantly shopping for the highest yields that we can find in the eligible securities. So T-bills were the best last couple quarters, so we've been expanding that and reducing the others, and there hasn't been much supply in discount notes. And next quarter, we're going to see that change. T-bills are no longer the best, so as we roll out of T-bills, we'll probably be putting more money into discount notes. The money market funds are lagging, so we try to keep that to a minimum. On the right side, total return. The green bars represent our portfolio, the red bars are our benchmark. You can see how returns just dropped at the beginning of the pandemic when the Fed put rates back down to zero, and we've been at zero for since then. There's a little life in the first quarter of 22 because the Fed started raising rates, and because this portfolio is constantly maturing, is very short term, we're able to capture some of those. So the good news is, with rising rates, the short-term portfolio is the earnings are going to jump. You can see in the bottom there, it says the average yield increased from 0.07% to 0.29% in the last quarter. So I would expect that to triple in the next month or two. As the Fed raises rates, we can capture that increase right away. So earnings in this portfolio will go from very, very low levels to making some significant returns quickly, which is good news. The next slide you can go to is the long-term portfolio. This was much tougher. This portfolio is managing our longer term reserves. It's about $457 million. Again, on the left is the allocation. You can see it's allocated to treasuries and agencies and munis and some CDs. And the allocation has been pretty steady. We haven't changed that much. The total return is the difficult story because, as you know, when interest rates spike, the bond prices move in the opposite direction. So our fixed income holdings, the market values declined. So we have a negative total return. Now these are treasury and agency securities which we hold to maturity. So we're a buy and hold investor. So this is paper losses, right? So the market value goes down, but we hold these securities to maturity when we get our full principal back. So I'll just wanted to say that out loud, that this is scary to look at, but we're going to hold these securities to maturity and we're not going to realize these losses. So the good news is, as we cycle to higher rates, we'll be able to capture those in the future, but the next few quarters, we might see some total negative returns, but So that we did outperform our benchmark, but they were both negative, as you can see. Our duration was shorter than our benchmark, which made our portfolio a little less sensitive to the change in interest rates. So that's why we outperformed. And I plan to leave it that way as we go through this interest rate increase. The portfolio isn't real active as we don't have a lot of maturities and we don't have a lot of bonds being called away. So there's not a lot of reinvestment at this time, but over the next couple of quarters it'll be quiet. We might see some more negative returns, but then we'll be able to reinvest some money at higher yields, which will eventually be beneficial. Next slide. So the trust, this is the OPEB trust. It's managing assets set aside to fund our OPEB liabilities, which stretch 30 some years out to the future. So it's a long-term portfolio. It's managed over at the State Board of Investment. You can see it took a big hit in the first quarter. It's allocated partially to fixed income, partially to equity, and a small amount in cash and money market funds. As you know, the stock market hit this portfolio dramatically, as you can see. Part of those losses, about 11.5 million, were from the equity market exposure, and about 3.5 million were from fixed income bonds we hold. So the fixed income portion, we're gonna, like I said, we hold to maturity, so we're not gonna recognize those losses. But unfortunately, the stock market hit this portfolio hard, and I think that the return on the equity portion was minus 4%. The trust overall was down minus 4.11% overall. So I think it's worth noting, when talking about this portfolio, that we're still in a very strong funding position as far as our funding our liabilities go. And we have to keep in mind this is a long-term investment. And we went into this investment years ago knowing that we did have equity exposure, and that's going to mean some periods of volatility. Over the long term, this is a 30-year investment. We will realize the higher returns that the equity market will bring us. We've got, even with this bad quarter, the trust has realized a return of 8.9% over the last 12 months. And over 10 years, it's been an average of 13.4%. So we've had really good success with this. It's just hard to see this quarter. And we just hope that the stock market will correct itself over time and get back to some positive returns. So that concludes my comments. I'd be happy to answer any questions.
Any questions for Mr. Dunn? Yes.
Chair, thank you. Just a quick question. Was about the short-term funds. How fast, like you said, next quarter we're shifting away from T-bills, and so how fast can you make some of those decisions? Because I think the next year is going to be very volatile as to where things are.
Sure, Mr. Chair, committee members, that portfolio, our longest investment is 6 months. If that gives you some parameters, but we have investments maturing every week, so we're able to. If we don't need that cash for expenditures, we can reinvest it at higher rates every week. We're doing that, so we can realize the higher rates almost immediately.
Thank you.
Any other questions? Just one quick question on the short-term portfolio. So do you envision the need to shift away from some of the categories of investment because of the volatility in the market? I mean,
in the short-term portfolio?
Are we buying cryptocurrency? Are we at that point or not?
No, I mean, Mr. Chair, we have state statutes we have to follow what we're allowed to invest in, which is very conservative. So, the securities we're in are very, very safe, very, very short. Right now we're predominantly in, like you saw, T-bills, government agency discount notes, and money market funds. So I don't envision going into any other securities. There are a few other options that statute allows us to buy. For instance, commercial paper, which could provide a little bit of pickup, but is much more of a credit risk because you're buying the credit of whoever's issuing that paper, which is a bank or somebody like that. So I imagine we'll stick with these securities and try to do the best we can. But we don't have any exposure to anything risky or any currencies or Russia or anything like that.
Thank you. All right. Thank you very much, Robert.
Thank you.
Our next information item, we have Cy Jordan and Ashanti with the Division and Department Burst Spend Plan Policy and Update. Welcome.
Thank you. Good afternoon, Chair, Council members. Cy Jordan, Director of the Office of Equity and Equal Opportunity, here with Ashanti Payne, Assistant Director. And we are going to review our diverse spend as an information item today. Our diverse spend plan that we have as one of our action items with our strategic planning. Just as a reminder, our office implemented an engagement and development outreach unit last year, and so we have been moving forward to staff that unit. We right now have one staff who currently supports mainly our data analysis as well as the development of the strategies and starting out the plan. We are in the process of our second interviews for a manager for that unit as well. And so we did discuss at the retreat several strategies that we're working on within that unit as well as across the organization with Metro Transit as well. And so this would be one of those action steps, would be the diverse spend plan. And the intent is to move it forward to a policy. I did want to pause for a minute before we delve deep into the diverse spend plan. We're also going to be joining with procurement to go over our MCUB update for Q1. And we'll go more into our local spend as well as with our Minnesota businesses as well. But I did want to give you some highlights and some peek at our federal FTA report that will be filed this week. We have some significant success and we're going to be presenting in detail to Transportation Committee, hopefully coming up in June. And so want to certainly lift up and applaud staff across the organization within our office as well as those who are making the purchases and who are involved in moving us forward and changing the way we do business at the council. And so in 2021, if you recall, after some community engagement, we updated our FTA 3-year goal to 14% with an 11% race conscious goal and a 3% race neutral goal. And so as of June, well, through our reporting period of October 2021 through March of 2022, which is our June report, we've achieved 20.9% awarded in our DBE participation, again, our federal awards. And so we've significantly increased the utilization of DBEs and have awards to Black American women and Hispanic American women and Native American and subcontinent Asian American men, which is a great improvement from our last report. And so this is not only our highest achievement, but for the first time, we have a group other than white women-owned businesses that have had the highest dollar value of awards. So that's significant for us. And also one other highlight, our Black American-owned firms make up 12.6% in dollar value in this June report compared to 0% in our June 2021 report. And so our outcomes, of course, continue to be to increase spend with all small businesses, but also to eliminate that racial disparity gap. So we're on track for that and want to continue to maintain and sustain that growth and opportunity as we move forward. So that's only one piece of the puzzle is our federal spend. And so we're going to go into our diverse spend plan for our continued action and sustainability.
Good afternoon, Chair and council members. If we could advance to the next slide and actually, yes, I covered this. This was our strategic plan that we shared at the retreat. And go to the next slide, please. All right, so as I mentioned, our goal is for this to become a policy, so we will be coming back to this committee for approval of the policy, but we wanted to provide an update and give some context to that policy that will be forthcoming. So the components of division and department diverse spend plans, of course, they'll have to talk about their outreach efforts and what they're going to do prior to procurements coming out. And it's broken down by each type of procurement type. So goods and services, overall protected spend, micro purchases, our sheltered market, MCUB select. As needed or on-call services, we know that both from what some call equity audits or reviews of programs, we know that across the country, as needed or on-call services have been identified and called out as a barrier to participation from certified small businesses. And we don't want to eliminate that from the business unit, but we want to make improvements in that area. And that's why I'm highlighting that as a component of this plan. Of course, construction, requests for proposals, master contracts, and then a narrative that will be completed by the division director or general manager that should include the commitments and how they're going to create accountability within that division or department. And examples would be reviewing the intake forms with project managers, asking those type of questions in terms of how are we identifying opportunities for MCUB and other certified small businesses. Next slide, please. So execution plans should project at least 12 months out. We think it's important that they're approved by the general manager or division director. That division should own that and be create accountability, but ultimately it will be submitted to the Office of Equity and Equal Opportunity. And of course, we want to target for overall spend, but also if we're talking about equity, you gotta disaggregate the data and your targets, both by gender and ethnicity. And the plans will be monitored and the results reported each quarter. We're still in development and further development of our workforce dashboards, but the next step will be our small business dashboards to be able to track this information. And then the Office of Equity and Equal Opportunity will provide training and technical support, helping those divisions and departments identify how to break out contracts, where it makes sense, where we have opportunity and where we have good representation and high likelihood of success. Next slide, please. As we mentioned before, the outcome is going to be a council policy. And this will really provide OEEO and procurement to be better positioned to support and provide technical assistance across the council. And it also will ensure that departments and divisions engage with us earlier and early on in the process to ensure that we are being intentional and thoughtful about how we execute those plans. And this work is all consistent with the goals and objectives identified in the council's equity strategy and framework. Next slide, please. We just wanted to share a timeline for policy or for the implementation and when you can expect to see us back. So the finalized spend plan and draft policy will be completed here in June. It'll be disseminated for review. It of course has to go to the review team. But ultimately, our plan is to have those approved by the division leaders and general managers by September 1st, 2022. And that concludes our presentation, and we would be pleased to take any questions that you have.
Any questions? Councilmember Pacheco?
Yes, I mentioned this before in another meeting that, and I saw here in the outreach efforts there is that we don't appear to have anything in other languages when we do the outreach. I don't know how much we've spent or what we're doing in that area. Did you respond to that?
No, we don't have our outreach in other languages, but that is definitely something that we can work with our Title VI administrator to help us identify what would be, what makes sense in terms of which languages we should translate. There is a process by what we call, not to get too technical, but a four-factor analysis that we go through to identify which languages we can translate information to.
Well, and I on my day job, I'm with the president of the Latino Chamber of Commerce, and this year we're going to spend a significant amount of time on procurement and diversity. And there are a number of programs that are out there now that are supported mostly from the corporate area, that with Chase and Goldman Sachs and others providing pretty much free mentorship to the diverse communities. And so I'm not sure how we can work with them, or if that's something that we want to do down the line as far as providing mentors or working with or collaborating with some of the corporate efforts that are going on today.
Thank you for that question, Chair, Councilmember Pacheco. That is something we had started to engage in before the pandemic, and we kind of got upended. We were working with some of our partner agencies. Specifically, the Department of Admin has a corporate kind of sector to their services that they deliver. So we're looking at ways to leverage resources, because we know that we can't do it all ourselves. So that is definitely an area that we're re-engaging with now, and started to have those conversations again with some of our partners on how we can better leverage the resources that are already out there, and also the resources that are delivered by some of our partner agencies like PTAC, Department of Admin, and others.
Any other questions?
Mr. Chair.
Go ahead.
Thanks so much for the presentation. So often we hear in this committee and in other committees that we did not find enough qualified people of color to do this work, or it's too technical, or it's too specialized. And sometimes very disheartening. So I want to know, will this new outreach and this new policy lead to a different outcome? Are we going to do different things than we do right now? So we don't hear it every time that we don't find enough qualified people of color who can do this work.
Yes, so one of the roles of our office is that we establish goals and for specific contracts. And so we hear that oftentimes. So one of the things that we have found to be effective is open houses or meet and greets sessions that we heard. And one that we did recently with environmental services, we invited both businesses that are larger, longer established businesses that are plan holders with us, and also certified small businesses, businesses owned by people of color. And one of the feedback we got from both the larger, longer established firms as well as the business unit is that we weren't aware of that these businesses were out in the marketplace. And it provides the opportunity not only for them to get introduced to these businesses, but to hear from them, learn about their business. Example I'll give, one woman-owned business, black woman-owned business who left one of those larger firms and started their own firm. So they're very technical, was a leader at one of these firms. Even the firm didn't know that after she left the firm that she had started her own business. And they made that connection. Our business unit wasn't aware of some of these businesses, and they thanked us for, and the other business said, are we gonna do this for transit? Because we need to do this. So that's been like really one of our effective strategies in terms of bringing awareness and making understanding that these businesses do exist out here. they're very capable and ready to perform and connect with us. I'm going to be coming back for another presentation too, and I have some other things that I'm going to talk about. I might as well talk about them now. One of the things that we did, and we shared this with council members as well, is reinvigorated a program, an outreach program that we called Doing Business with the Council. It's a communication series, a step series that we have. And one of the things that we're finding, the good thing is that it's generated a lot of, we have an inbox that comes to our staff at the Office of Equity and Equal Opportunity, and that's exploded to the point that, we can't keep up with the responses. So that's the good thing, and the other thing is that, so there's an interest, there's a renewed interest from businesses wanting to learn about the opportunities, and we're trying to keep up with responding to that interest, that renewed interest in the council.
Councilmember Barber.
Thank you, Mr. Chair. It's kind of a convoluted question, but I know we're doing these plans by division. And so when I look at both Metro Transit and MTS, sometimes there's some very large contracts in there, especially with the contracted services, bus purchase, things like that can skew the results. Are you going to have them look at different areas of their purchasing so that we can actually get a good look at some of the good work that's being done? Because like I said, sometimes then you look on paper, like for the contracted services, it makes the numbers look not as good as what some of the work they're actually doing. Make sense?
Yes, thanks for the question. I think I got the gist of the question. So Metropolitan Transportation Services specifically, we know they're, just recently had a $32 million contract that went out, and typically those contracts we don't set goals on because they're service contracts. We're provided rates. It's not like your typical construction or project where you can line item and item. That said, we're trying different strategies, and it's a good reason why those diverse spend plans are broken out by type of procurement as well as overall. But one of the things that we started doing with those large service contracts is leaving it up to the responders or proposers. Well, first having the requirement to submit a small business inclusion plan with their proposals, and having them identify how they can incorporate small business participation, whether it's small, whether it's cleaning the buses, whether it's fueling, whether it's uniforms, printing of pamphlets, surveys, whatever it is, let us know. And I think it creates the opportunity and space for innovation, for them to come up with ideas that we don't think of because they're the experts. But it also gives us an opportunity to get some participation in areas that we don't historically or have not historically had participation from certified small businesses.
Just a quick comment. We had come before Transportation Committee on Monday, master supply agreements with TPE factored in, which is something new, and I think that was, that's a good example of some of that new kind of thinking, which is helpful. So, but yeah, thank you for your answer. I appreciate it.
Councilmember Check.
Mr. Chair, members, I've read the materials in that survey that you put out recently, or I don't know how new it was, but I thought it was very helpful. I thought there was some good information I learned from working in this area for a while now. And one of the things that we're looking at from the Chamber's point of view right now is that we're looking more like a triad here, because we have the government, and most of that goes to the Minnesota Department of Administration for certification and approvals, basically. And then the corporate side, and I'm working with U.S. Bank and others that were previously employed, and looking at their goals and their structures. And then the final one is the nonprofit sector. What are we doing ourselves as far as hiring, preparing some of the contracts that we have? Because it came down to looking from the Department of Administration, and we were looking at just under, from what we got from the Secretary of State's office, just under 9,000 Latino businesses in the state of Minnesota. And to get approved for contracts, you need to get approve or have certification that Department Administration provides or approves. And when I asked Department Administration, okay, how many Latino businesses do you have today that are now certified and therefore can do business? Not people who've got contracts, but can. There's 88. So there's quite a bit of gap between 9,000 and 88. And so we'll be working hard and harder to get people certified as our role. We'll be doing the outreach and the like to bring people to the table and get them certified. But that's a big gap, and that's what, it's one to say, and then it gets to a point where, well, we don't have people qualified. Well, if we have to look at what are the barriers to certification, or where is that? Where's the bottleneck happening? That's why I really like the surveys information that you provided, because I went back to our organization and started looking at, so what are we doing as to either promote it or not be a barrier? Or do we go back to the same people? And what are we doing to encourage some breaking up some of those larger contracts, therefore providing mentorships or partnerships that can provide more opportunities? Because what I get back is from some of the businesses, John, I can do the work, but I don't have the back of the house. I don't have the bonding capacity, and so I get to a certain level, and that's it. And you'll see that in every study. So I'm looking forward to the work you're doing, and I think you guys, the Metro Council is a good spot. You have so many different levels of services, whereas cleaning something or building something or managing something, and I think we can push harder on those around us in government to really make a difference. But I like where you're going, and I've been reading more and more, and I have some meetings coming up with staff here, and I think we're heading in the right direction.
Thank you, Council Member. That is definitely encouraging, and I think that survey that you're referencing is really served as the foundation in terms of how we build out our strategic plan and what sorts of activities and actions. And the next step is to kind of, measure and see what the outcomes are and where we need to make some adjustments and make some pivots.
Councilmember Musa? I think so. How often do you work with our communication department to amplify the message? Because sometimes I feel we might be underutilizing our comms team. So, and how often they also do we also know if our communication department here works very closely with multicultural, community-owned small and media outlets that can really maximize the message for us.
So, thank you for that question, Councilmember Musa. We do work with our communications department quite a bit. They helped us reinvigorate that outreach program that we did. They help us craft it into plain language, make sure we're hitting the right messages. And then I'll also mention an effort specific to Metro Transit and their marketing department in their efforts to increase certification that Councilmember Pacheco spoke to specifically. So we are specifically hitting communities. I personally did some interviews and radio shows on KMOJ. I know Selena Martina did some interviews in Spanish about the MCUB, how to get certified in other places, in other venues. So we're doing strategic outreach and hitting those media outlets that hit those communities that we're trying to connect with. And communications has been a big help in helping us do that.
One quick follow-up, and then I'll be done.
Please go ahead.
So, is there any government counterpart that is really doing good work that you admire and say, hey, we should really do what they do here?
Oh, man, that's a good question. And I think, I do want to uplift individuals. I think, there are often times when we identify some procurements that could go MCUB select, and maybe the project manager chooses not to for whatever reason. However, Without having hard, concrete data here, I will say, definitely, I think, engineering and facilities does a good job, in that area, at Metro Transit. That's one that jumps to my mind right away, and I hate not to, highlight others, who have done a good job, but that one jumps to mind.
What about outside of the Met Council,
Oh, okay.
government counterparts?
Oh, government counterparts. Mr. Sage,
Chair, council member, and so we are looking to implement a pilot project here as well. We have identified a bench program out of San Francisco, and so that's going to be a part of one of our strategies as we move forward in our organization as well.
Thank you.
Okay. Any other questions? No? Thank you very much for the presentation. And we have one last item, which is the 2022 first quarter procurement summary. Name of goals review by Jacob Jackie, our Director of Procurement. Thank you.
Thank you, Mr. Chair. Good afternoon, Mr. Chair and committee members. My name is Jody Jacoby, and I'm the Director of the Procurement Program. And I'm here today with my partners, the Office of Equity and Equal Opportunity, Cy Jordan and Ashanti Payne, to present the first quarter of procurement projects for this year, 2022. The Council's expenditure policy for the procurement of goods and services authorized the regional administrator to approve awards not exceeding $500,000 for the purchase of goods and services, and then construction not exceeding 2.5. So this report includes a breakdown of the procurements that's grouped by value and then also procurement type. It also includes MCUB utilization. So I'll start with reviewing the procurement summary and provide some notable projects and industry trends. And then I'll transition to the Office of Equity and Equal Opportunity to discuss the utilization for MCUBs the first quarter. So I'll turn your attention to the second page of the report, which in essence is an executive summary, a high-level procurement summary of details for first quarter. And as you can see, the number of procurement events, there were 9,200 events alone in the first quarter, and our total spend was almost 127, a little over $127.5 million. How does this compare to last year? It's interesting to look at the trends. And for last year, the total spend was $147 million more. So it was $274 million. And the number of procurement events was only 37 more. So it's interesting to look at the number of procurement events stayed pretty same, but the dollar value was much higher. And that was due to just a lot of construction projects for environmental services. And in looking at the pie charts on the bottom of the page, the lower left chart indicates that this is again very similar for many quarters at the Met Council and many public agencies in the United States and also across the nation, that 94% have a transaction value of $10,000 or less. And that's the council's micro purchase level, where you only need a quote. You don't need multiple quotes to do work. So there's a lot of opportunity, especially for MCUBs. And then the other pie chart on the lower left-hand side is procurements by contract value. And it indicated in first quarter, 79% of the contracts had a value that was greater than $175,000. And that value is significant because that's the value where the council formally advertises our goods and services and our projects. Turn your attention to page 7. line number 11. It's a master contract for environmental services. And Chair Barber talked about master contracts and how procurement, the Office of Equity and Equal Opportunity, and the business units, we're really trying to create a different structure, initiating procurement action plans to get different outcomes. And so one of these was breaking up some work that historically was done with one large single contract, and they broke it into an opportunity to have multiple master contracts to spread the work around. Not only have that expertise by discipline to give a lot more opportunity and intentional with the size of the work, the engagement, and then ensuring we have that involvement all the way through the process, which led us to an outcome of, the goal was 10% for a DBE commitment or MCUB commitment, and it was 100% achievement. An MCUB vendor actually was able to satisfy the contract needs and had one of those master contracts awarded. And that happened because of really intentional work by staff. And so there is a lot of work happening. It's because of the shared mental models. It's because of those courageous questions being asked by multiple people. So really excited to share that success story. Some other notable industry trends that you're facing, and Mark referenced it earlier, but you're facing it at home as well, with price volatility and fluctuations. We have been an active partner in many, many sessions with our prime contractors, with our consultants, with our targeted vendors, specifically the Association of Women Contractors and the MMGSA, to listen and just to learn with some of the struggles that they're having when they're responding to a bid or proposal. Some of the things definitely are the volatility of some of the commodities, even the ability to just respond. There's a lot of public works out there right now. And so we're looking at different approaches for escalation language versus allowance language. We are really increasing our effort to advertise our projects nationally. We're partnering with a lot of associations to push them some targeted advertisements so they can push it out to their members to draw them back into that website of doing business with the council, which, as you've heard, we're looking at increasing input on that to make sure that it's as transparent and meaningful as we think it is. We're also looking in second quarter, I believe we're going live June 1st, publishing a bid forecast for our construction projects and our architectural and engineering contracts, because we're hearing, because there is so much work, that our contractors are very selective in what they bid on, and they're strategizing and what they propose on. So we're going to be publishing, again, in cooperation with our business units, but publishing that information to give them an at-a-glance look of what the project is, if there's any subcontracting opportunities, and its expected range of values, when we expect the project to be advertised, and when do we actually think the work will start. And so more information in the spirit of being collaborative and really being a stakeholder in it as well, and treating these relationships as partnerships. We're also looking at contract terms. We have lots of conversation with our public agency procurement peers, and what we're hearing from them and from our contractors and consultants are they can't secure their pricing for 5 years. And so we're looking at our contract terms and making determinations, again, with the project managers and the business units on what makes sense. And recently we had a fertilizer contract for Metro Transit, which had 11 different locations, 27 different locations, and there are 5 different types of fertilizer that we were applying. And we had this out for 3 or 4 years. And what we heard from the vendors immediately, even though we included price escalation language for fertilizer, is they still don't have certainty to bid on it. We did a lot of research looking at futures for fertilizer, and fertilizer, the price has increased 250% over the last few years. So we looked at including that price escalation and of course de-escalation language in the contract, but decided based on the feedback from the vendors who indicated they would not bid. So we pulled it back and we're going out for a shorter 1-year bid, again with escalation, some escalation language. And then through that, we've identified that we can do an MCUB sheltered market program as well because of the value. So a lot of courageous, vulnerable conversations that are taking longer, but I believe are really leading us toward the outcomes that we want to see, not only helping our business units get what they need when they need it at a fair price, but also helping our vendors move forward better and differently. Our MCUB incentive pilot program, procurement partnered with the Office of Equity and Equal Opportunity last year, and you awarded us one of the equity grants as part of the equity grant dollars. And the 2 of the projects have been completed for the solicitations that had MCUB goals that included a financial incentive of $5,000 upon project completion for every % committed over the goal. And those 2 projects have seen really fantastic success, where the goal was 20% on one project and the commitment was 29%. And on the other project that just passed at Environment Committee last night, the goal was 15% and the commitment was 19%. So trying some new initiatives and seeing some really good success as well. We're also researching and utilizing many more cooperative procurement contracts that have that price certainty and that term certainty. So again, we can help our business units move forward. So those are just some of the notable events that are occurring right now in procurement, and then I'll transition to Ashanti to talk about the MCUB utilization.
If I may, we're just running against the clock a little bit, so just keep that in mind, but thank you.
Yes, thank you. Council members, Chair, again, Ashanti Payne, Assistant Director, Office of Equity and Equal Opportunity. I'll quickly just hit the numbers and some of the highlights for our MCUB spend for Q1 2022. As a refresher, we have a goal of 14% for construction and 10% for goods and services. And in Q1, we had 11.5% spend within MCUBs on construction and 3.7% on goods and services. So we did not hit our marks. Historically, that is an anomaly, not unusual for one quarter not to hit it on construction, but normally that's, in my experience at the council, has been Q4. So definitely something that we want to keep an eye on, but we have, by the end of the year, hit our prescribed goal. Again, we know the big spend divisions are Metro Transit and Environmental Services. And MCUB, it's really environmental services. Again, just like with our DB program, we are experiencing more equity along the racial and gender spends within our MCUB program as well. I'll leave this for any questions or review that council member have in terms of the numbers and breakdowns per division. But I do want to hit on some of our highlights. Jody mentioned some. We've had some expenditures where we've had 100% MCUB recently in Q1, or projects that were awarded. We already talked about the how to find contracting opportunities, video that's on YouTube, and restarting of our MCUB Welcome Series. And then our direct spend with MCUBs nearly doubled from Q1 of 2021. So we had an IT solutions for $98,000 that went 100% to MCUB preference that for $40,000. And then we used a state contract, which sometimes doesn't result in MCUB for $25,000. And then one thing that we just had a meeting yesterday that I want to report, because this has been an effort that's been 2 years in the making for procurement in the Office of Equity and Equal Opportunity, a supplier diversity program with New Flyer. So we have reached a point where we can say that we're going to have some success in that program. New Flyer has chosen a vendor that they want to move forward with. It is a black male-owned firm, and that relationship will be solidified here. So that is definitely good. Like I said, that was 2 years of work from procurement staff and OEEO staff. So very happy to report that. And we'll stand for any questions.
Any questions? Councilmember
Hey,
Brooks?
It'll be very quick. It's really just a comment. Number one, I appreciate how you guys have continued to evolve this report to be more interesting as we've been doing this, so it's really appreciated. Also, big kudos for thinking creatively on the supply chain issues. I know with my personal business, it's medical devices, and supply chain stuff is very, very challenging right now. So I appreciate the ability to think outside of the box, because that's gonna help us in the long run. So, and also really excited to see that bid proposal forecast on the site, because I do think, you know, it also, you know, if you have a construction firm or supplier out there who maybe isn't certified, they'll see that and say that's maybe an opportunity that, you know, could follow that pathway. So I think there's a lot of positives to having some of that information out there sooner, so very good.
Thank you. Any other?
No question, just a quick comment. It would be really helpful if you share with us the proposal forecast so we can spread the word out when you have it ready. Thank you for your great work. Really appreciate it.
I just have 2 quick comments before we close here. One is, I've been here since, 2019, and it's fun and gratifying to see all the improvements that had happened in just